Welcome to the Money Masters. Today, we're tackling a topic that can be confusing for many investors: index funds versus ETFs. These two investment options have gained a lot of attention in recent years, and for good reason. They offer low-cost, diversified options for long-term investors, as well as flexible trading options for those who prefer a more active approach. But which one is right for you? In this video, we'll break down everything you need to know about index funds and ETFs, from their unique advantages and disadvantages to their historical performance. By the end of this video, you'll have a clear understanding of the differences between these two options and be ready to make an informed decision for your own investment strategy. So get comfortable and join us as we dive into the exciting world of investing. Firstly, let's start with index funds. An index fund is a type of mutual fund that tracks a specific index, such as the S&P 500. The index fund's goal is to replicate the performance of the underlying index by holding the same stocks as the index in the same proportion. Next, let's explore the benefits and downsides of investing in index funds. The benefits of index funds are lower fees than actively managed funds, diversification across a broad range of stocks, automatic rebalancing, passive management. Additionally, index funds can be more tax efficient compared to ETFs due to the way they are structured. Because index funds are structured as mutual funds, they are able to minimize the tax implications of buying and selling securities within the fund. The downsides of index funds are limited opportunities for outperformance, still being vulnerable to market downturns. Index funds typically have a higher minimum investment requirement compared to ETFs. This can make them less accessible to smaller investors who may not have a lot of capital to invest. Now let's switch our focus to ETFs. An ETF, or exchange-traded fund, is a type of investment fund that trades like a stock on an exchange. ETFs are similar to index funds in that they aim to replicate the performance of a particular index or benchmark. However, ETFs differ from index funds in a few key ways. First, ETFs trade like a stock on an exchange, which means they can be bought and sold throughout the trading day. This provides investors with more flexibility and control over their investment portfolio. Second, ETFs can track a wide range of indexes beyond just traditional stock market indexes. For example, there are ETFs that track bond indexes, commodity indexes, and even alternative asset classes like real estate investment trusts, REITs. Finally, ETFs generally have lower expense ratios compared to actively managed mutual funds, which can help investors save money in the long run. However, ETFs may also come with trading commissions and bid-ask spreads that can impact returns. Overall, ETFs can be a powerful tool for investors looking to gain exposure to a specific sector or asset class, or those who prefer a more flexible trading strategy. As with any investment option, it's important to weigh the benefits and risks before making a decision. Index funds and ETFs are similar in that they both seek to track the performance of a particular index or benchmark, such as the S&P 500 or the Dow Jones Industrial Average. However, index funds and ETFs differ in a few key ways. The most notable difference is that index funds are priced once per day after the market closes, whereas ETFs are traded like a stock and can be bought and sold throughout the trading day. This provides investors with more flexibility and control over their investments. Overall, both index funds and ETFs offer investors a low-cost, diversified investment option that tracks the performance of a particular market or sector. The choice between these two options ultimately comes down to an investor's personal preference, investment goals, and risk tolerance. The information provided is for educational and informational purposes only and should not be construed as financial advice or a recommendation to invest. It is important to do your own research and consult with a financial advisor before making any investment decisions. That sums up today's video on ETFs and index funds. If you have any questions, feel free to post them in the comments. Don't forget to like and subscribe for more entertaining content on investing. Until next time, Money Masters.